Mic check, mic check. 1 2 1 2. We are public live today as we get ready to go ahead and review the markets. As you might have seen, we got a long session prepared. I hope that you are well and doing great and ready to talk and learn about markets. Everyone, good morning, good afternoon, good evening, wherever you are in the world, whether you're live or on the replay. I am so glad that you are here. It is good that you are here. Boom, 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 head snack. Everyone, let's get into it. And before we even do, we can see as we've been tracking the NASDAQ over here with one important repair taking place. Now the second. After the second repair, we've had that breakout, that retest, and now looking to resume up. Yes, I do think that a lot of people are in disbelief. What's really cool about this line over here is that you can see that it comes from this. It was the prime trend line is over here, and these touches is what went ahead and set off that line. And then you could see added to that touch over here, markets after that first repair came into that as resistance. It tested it twice. Isn't that amazing, the symmetry of the market? And then after breaking above it, it is so far thus held. And as long as it's above that purple line, don't fight the market. Don't fight the price action. Stay on the right side. Price closing on the daily time frame below that purple line. We're talking about some discretionary action right now. We got a big lineup ahead. We're going to take it all as it comes. I hope throughout this session, you're able to gain a little bit of nuggets of insight, of wisdom. If you do at any time, please go ahead and just hit that like button. I appreciate the support. And really, it does get me fired up. A close below that purple line, that would send us back neutral. That would send us a neutral because that's a lost repair. First repair, second repair, that would be lost. This trend line over here will then highlight it if we lose that purple line, because a breakdown below it, that would be a sell impulse, likely taking us down to test at least the lows, if not taking it further. It's about trading both sides without bias. Right now, we are able to see, right? All those a few months ago that maintained only a bearish bias, instead of trading both ways without bias, everyone looked to them as if they knew exactly what was going on. These people obviously understand markets. They've gotten obliterated in the past few months, unable to make the turn. You need to stay flexible. You need to be able to trade both sides. This is the Fed's balance sheet. And funny enough, we were doing a session together the day before the US regional banks ran into massive trouble with Silicon Valley going under. And we were talking about when things break, likely it's going to look like this. And this was September 2019 when the overnight repo rate broke, it spiked up, and the Fed had to begin their balance sheet expansion. Equity markets melted up. They didn't make new all-time highs. They literally melted up. Right? And we talked about when things break this time, it's likely going to look a little different than what everyone expects, as far as like, remember what happened in March 2022? It was like straight down, limit down, limit down, limit down. Fed comes in, they announce this massive expansion of the balance sheet. And then like the macro bros are like, oh, there's an insolvency event and we're going to crash down and make new lower lows. And we're like, no. This is uber asset inflationary. You are forbidden to sell tongue in cheek. You can do whatever you want. We're here to teach people to learn to fish for themselves. That's not the only thing that we see happening over here. We see also this neat chart is showing Bitcoin relative to the liquidity of the big four. We're looking at the Bank of Japan, the Federal Reserve, China, and the ECB. And you can see it's in light blue. It's this one over here that I'm highlighting. You can see right now it's kicking up a little bit, right? I think China was a little, on the wires easing yesterday. And you can see that we are watching Bitcoin here tracking global liquidity pretty well. Look at the bottom over here, tracking it pretty well. And we will continue to watch that and track that in real time. We have a major update today. This has been going on now for 6 weeks. We've been looking into this and whatnot. Right now, the stop loss on Ethereum on the 8-hour time frame only. This is the 8-hour time frame on the buy side. If you're trading the buy side alone, remember the buy side alone, spot only, is more than enough to get it done. Or if you're trading on the buy and sell side, we're changing as per last week's full analysis and session. People think we move so quickly. We are slow to move. The strategies we have in place are foundational. Please make note, if you're choosing to go with what my preferred settings are, that is what has now been done. On the Discord, that is now on the 8-hour channel, the updates you will get, and they are listed on all the pre-filled templates. You will find out that change made. You could go ahead and execute as you like, but I want you to know how I'm executing always. All right, so we see here on the 8-hour time frame a little bit of CTM 2.0 positioning that we are now long across the board. You have a lot of people out there who, as price began rolling over, executing a lot of shorts. I mean, momentum is up. This is the banking crisis. You all remember it was just 2 weeks ago that we went into this massive banking crisis, and a lot of people thought that like doom and gloom. I have no idea what's going to happen. That serves me really well. But I know that we were kept out of the market. Whether you look at Bitcoin over here, whether you look at Ethereum, kept out of the market on the sideline safe. If this would have rolled over even a little bit more, we would have began picking up short trades. And then in everyone's disbelief, as price rose up like a beach ball held underwater, we took longs. And people are like, whoa. You're taking longs into resistance after price is overbought? That's insane. Maybe not. And then, I mean, clearly it was not the case. But, right now it looks like ETH2 is taking a long trade, and it's taking it, towards some overhead resistance. That overhead resistance is quite clear when you look at a chart of Bitcoin as well. You could see that Bitcoin over here is pushing on the ceiling, making right now on the daily time frame, it looks like a potential higher low. And that's not something I should get into discretionary real quick. I'm going to be flipping around and going back and forth all over. It could be the block. I'm going to be going all over because I'm here to have fun. ID. So if you don't have a cup of tea, a cup of coffee, go get one. It's going to be an extended session, and I'm trying my best below to highlight what's going on at the time we talk about it so that you could get into it if you're following along. But we're going to go back and forth and including at the end, the blockchain club. If you're wondering who was talking about 2000, the blockchain club, I don't know. Right, I'm following, first of all, this is the bear market log scale trend line breakout. And it takes us long. And then I'm not going to get into it. We did this all discretionary. There was a short trade here of a breakdown, and it wound up being small profits and then getting out. It just didn't roll over and go anywhere. And then over here, once you're back above, this is a new buy trade. And as long as you stay above that purple line, you're on the right side of that. But as far as what happens going forward, you're much better off not having any bias and trading what's happening. What does that mean? Well, right now, if you're not long, you're on the wrong side of the trade. And you've been on the wrong side of the trade. And we've seen this is since 2020, since 2021, the third best quarter for the NASDAQ on record. You're simply on the wrong side of the trade if you are short throughout this or if you keep shorting into this up move. Now, if we get a breakdown would be where I'm highlighting that line. Well, that's a sell impulse. Let's get on the right side of the trade. I have no idea if it goes somewhere or if it goes nowhere like this last one did over here. This one didn't go anywhere, but we wound up being able to manage it well. And by the way, that type of education takes place daily and in real time off of live examples. And that's the best way to learn. So I don't know. A lot of people presume that what we're looking at, my good friend Peter from Game of Trades thinks that this is probably some type of trap that was set up just like in 2000, 2007, and it could be. Be aware of all different viewpoints at all times. I think that's the way to go. All right, let's jump back over. Let's take a look at what we were looking at right over here. And this is the Bitcoin. This is a bit discretionary, always trying to improve our discretionary analysis, our trading. We're trying to make sure that why it's for fun, that we understand the macro with the best of them, always looking ahead, understanding what's happening ahead, and then doing our best to have the timing correctly. Because sometimes we see things a little bit too soon. So we want to make sure that our timing is as close to perfection as possible. And we do all this to keep our minds sharp, to always to like quench that passion we have of learning, as well as understand that, look, it's our mechanical system that this is for fun and we enjoy it. All right, so I'm looking at this trend line over here, and you have to wonder now in hindsight, is that a good line? It seems like it's a good line. I'm not sure if it's placed correctly, and guess what? TA is very subjective. Mechanical trading, zero subjectivity. I got to jump. I'm going to go to that point, and it's a good one, but I'm going to keep you hanging for 1 second. I want to talk about that change that we took on the Ethereum stop loss. It changes things a little bit. For example, like this is our current performance on Ethereum for 2023. If you were using the 3% stop loss, it's a little bit different, right? It's going to go actually change that performance and it improves it a little bit. And that's not why we did it. If you were watch the full summary session incorporating all the data, you saw that it actually, if you go back to 2016, drastically diminishes the overall return. Now the return is such that some people might choose, and you make that decision yourself what stop loss you want to go with. But it's true, over the last few years, it's made a slight improvement. In this one case, it makes a slight improvement. Now, if you go back to 2022, you're not looking at much of a difference at all. You can see over here, if I were to put it back to what the stop loss was and what we traded 2012, you're talking about a 4% difference. Look at the drawdown over there. The drawdown is actually significantly better. But the overall performance did not change. And I just wanted everyone to be aware of that. So that was something I wanted to get out there and make sure I got in there. And now I can come back and jump back into my discretionary trend line over here, and just letting people know that this is subjective. What we do is completely rule-based. If we make any changes, it's data-driven, and it's something that's incorporated as a hard rule. There's no discretion about it. Emotions are taken out. Ooh, Rico, up on the matcha. Love it. Hypernova, what's going on? So this trend line over here, you got to wonder, was this placed correctly? This is how I placed it at the time. Or should it have been down a little bit lower? My eyes are focused over here as I place it. That's a little bit hard. You got to peek above it. And then you could say, well, that was a good touch into it. And, on the closing basis, we held over here. And the truth is, I don't know. But if you watch the last public video we did, it was called The Bullish Case for Bitcoin. I believe it was. We were focusing in on this trend line down over here, this prime trend line. And I showed in that video how this trend line makes the market structure all the way, not only to the top of 2021, but going back years. It's just for whatever reason, a trend line that the market pays attention to, right? And I could say over here, like, look where we just, look at this, look, and this is where during that banking crisis that we fell into. And the reason I bring this up is because I believe that this trend line would have been, I'm placing it off of right here. I think that rather than adding this trend line over here, you want to keep things as simple as possible. There's nothing simple about trading. So you want to take something that is extraordinarily complicated and you want to make it as simple as possible. And I could say that, well, I think that line probably provided a little bit more, let's say, alpha, right? Look over here. I'm just jumping up. So that's the bottom one, the bottom touch over there. I mean, that line is really neat. So I'm going to bring it back to where it belongs down over there. And we continue on it. Now, I haven't gotten to the bearish case for Bitcoin because there's plenty of time on that. Right now, there's nothing bearish going on with Bitcoin. There's a lot of bullishness going on with Bitcoin. And I could say that as, taking these trades off the bottom over here, right? CTM 2.0 getting us positioned in on the Bitcoin right over here. This is below 17,000. This was after trading primarily the downside, the sell side in 2022, and then out of nowhere, catching that long trade. And now I could say, well, not only is there nothing bearish going on, we remain on the right side, and that's what we want to do. Any individual trade does not matter. Right now, we're positioned long. We're positioned long and strong, Bitcoin, Ethereum, and Cardano. But whether or not these current trades move on to profit or get stopped out is actually meaningless. It's just another trade. But I do know that I will be on the right side of the market. And when the market does move on this momentum-based system, I know that I'm going to be there to capture those profits. And not only that, I know that my win ratios are. On Bitcoin, you're looking over here, the win ratio is 50%. That's high. That's only looking at 2023. If I go back and I show you since the beginning of 2022, you're looking at a 42% win ratio. And that's much more what the win ratio is. Like I come back all the way to 2018, and the win ratio is going to be close to that, 39%. I know that 60% of my trades are going to get stopped out. I know that 60% of my trades get stopped out. Do you think I care about any one individual trade? I do not. Not only that, I know that is going to be, that's the top of the bull market. So you're looking at two bear markets. Two bear markets, meaning people held through an 85% drawdown. People held through a 60%, two 60% drawdowns, and a 75+% drawdown. Add in the exciting thing, add in a bull market, and you're going to see that these returns start getting very exciting, and the drawdown remains. So it's the same thing on Ethereum. The percent profitable. Now this is with the adjusted stop loss though. The percent profitable is going to be, this is 35%. It's a little bit lower, right, than when we were using the 12% stop loss. Interestingly enough, with the 12% stop loss, see that, 38? Interestingly enough, with the 12% stop loss, the average loss was just over 3%. This is coming down over here. I'm looking at the average losing trade, 2.96%. Let me make sure that I have, the 12% stop loss. It's really interesting, right? Even though there was a 12% stop loss, it was only a hit like once. There was a few 10 and 11% stop losses. And you could see the average losing trade is now brought down about 0.3% with the lower stop loss. It is what it is. All right. JF, I love being live on the public end. I do. Now, it's true. If we never went private, we never would have been able to achieve what we have. There's no question about that. But I love the energy. I love the energy of being here together. And if you do too, if anyone's watching this and enjoys being here together, go ahead and hit that like button. It's greatly, greatly appreciated. And we'll keep going. We'll keep breaking it in. Yep. So Travel Troll, you know what? If need be, we'll get short here as well. We spent most of 2022 attacking on the short side. It's just most of it, not all of it, but notice that we trade both sides without bias. And we got to take in July to August this nice 52% gain, 53% gain on the long side. why everyone was telling you, going on a shorten into it, because bias is dangerous. Bias is extremely dangerous. And people learn that lesson over here. For us, we're just coming off massive shorts. Okay, boom, attack. Oh, over here? Okay, boom, same thing. People the whole time shorten into this massive move to the upside. We're like, I don't know. Right now, price is going up. If it rolls over, I do know that we will be on the short side. It's just how it works. So about that discretionary trading over there, I'm pretty new here, enjoying the daily CTM lives and energy in the house. Where could I find learning content to upskill my trading fundamentals apart from the live stream? I've already completed all the videos in the CTM course, especially drawing those magic trend lines. And I talk about, listen, that's a process that takes place each and every day, and it's cumulative over time. And if you're adding a little bit of knowledge, you saw in today's video how I just briefly thus far, whether it was on the NASDAQ or Bitcoin, talked about some discretionary elements. But over time, that information adds up. There's no question about that. Over here, it's added that the technical analysis and discretionary trading channels are great to see how people are viewing trading the charts. I personally only trade CTM 2.0, but I'm still keen to learn technical analysis, become well-rounded, and find me seeing posts on those channels and saying to myself, oh, that makes sense. Mad Dog, if you have strong willpower, then discretionary is a good place to further understanding of other indicators, etc. For me, I stopped reading it as I felt myself getting drawn in again. I want to purely trade CTM 2.0. For me, the extra noise was know thyself. It's one of the most important pieces of becoming an expert trader. Discretionary has got me in a mess before, so focusing on mechanical is simpler and less of an emotional roller coaster. What I recommend is first devoting yourself to CTM 2.0. If that even means only setting, if you're trading the daily time frame, an alarm 15 minutes before the signal period, and then only looking at the charts then. If it's the 8-hour, do that on the 8-hour signals. I think that you will find yourself over a 90-day period able to execute with strong discipline. And then once you've gotten that in order, because the whole idea is to make money, then you can move forward to learning more about your discretionary trading. We got a big announcement over here. You know that thus far, if you look back and you're like, performances, Ethereum outperforms Bitcoin massively. That's not what's happened in 2023. In 2023, Bitcoin is looking at a beautiful, sorry about that. Oh, I like everything to be perfect. That segue was a little off. 36%, right? And it's a good way to start the year. Bitcoin lagging behind. But if you go back further, if you go back to, let's say 2020, or I could do 2022, 2021, Bitcoin has a nice return. I think a lot of people, pick any expert you want in the markets, I think that they would be really, 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 really impressed with that type of performance. Ethereum outperforms, right? Coming back into 2020 as well. And you can see that massively outperforms. Notice the drawdown is the same. Drawdown's less on Ethereum. Sorry, right? And right now that's not happening if you look at the last 3 months. And I think that's going to change as we move on towards the rest of the year. We're looking at, on Ethereum, the Shapella announcement. So we're looking at the upgrade to Ethereum 2.0, and it's scheduled right now, roughly for April 12th. I believe that we're looking at a sell the rumor, buy the news event on Ethereum, assuming everything goes well with the upgrade. Now, I asked ChatGPT to go ahead and summarize what's going on over here, and basically that this is the propaganda that aims to improve the scalability, security, and sustainability of the Ethereum network, right? and goes over what the pros are. I asked for the pros, so whether you're looking scalability, security, sustainability, staking rewards. People have been able to earn staking for quite a while. They haven't been able to withdraw. Points out the potential cons, though this is true, and you always have to worry when you have these major upgrades on the mainnet. You could have a risk of bugs, and other things could simply go wrong. But ChatGPT did not mention anything about the withdrawal of staked funds, which is the main feature of this upgrade. If you want to learn more about that, let me include that link over here so you could go through all these bullet points. Now, I do believe that people are going to actually feel better about staking Ethereum, knowing that they could withdraw it when they want. It is important to note that it's not that everyone at once could all of a sudden withdraw their Ethereum that is staked. It's going to happen in waves. And I do believe personally, if we get past this with no major breakdown, that we are going to look at a lot more momentum returning over to Ethereum, where right now it is focused on Bitcoin. We'll wait and we'll watch and we'll see. This is a good reminder here that most of the time, if you look at this and you go back and you say, hey, Jordan, that's just simply up and to the right. All right, up and to the right, up and to the right, up and to the right. And I say, no. Most of the time, this is going sideways. This blue line is new all-time high on the account, but most of the time, you're running sideways in drawdown. And for many times, for months on end. And it's important to remember, and it's important to keep at the forefront so that you realize it's not about any one individual trade. Someone who's trading purely discretionary, it's like their heart and their soul are into that whatever trade they're into, because they put all their time and talent and analysis into that trade, and they want it to be correct. If you are trading discretionary, it's going to serve you much better to understand a mechanical trading system, including taking notes and detailed statistics of your discretionary trading, so you know what your overall win rate is. You know what your expectations are per trade, your average win per trade, your average loss per trade. It's very, very, very important. It's a good one. Be prepared, Billy Bob. It's a long one, and get comfortable. I hope that you learned something new. If you do, please go ahead and hit that like button. Appreciate it. I would like to get up to 100 likes before we get off over here. So that's up to you when we get on. This is the daily time frame on CTM 2.0 positioning, and why the 8-hour is significantly more profitable. It is harder to trade. It requires more, obviously, discipline and dedication. You have sometimes signal periods occurring overnight. The daily time frame is very easy to trade. There's only one potential signal period a day. It's for the busiest person, this is likely something that they could execute off of and execute off perfectly. There's not too many trades, roughly 12, 18 a year, and a busy year, 18, very easily to do. You can see that Bitcoin here, avoiding all noise, continues to hold this trade, currently holding a 16%. When I say the returns are still good, if we looked back to 2020, and we saw it was like an 1,800% return on Bitcoin, right? A lot of people the last 2 years would have been very comfortable with a 242. It's still a really good return. It's still a really good return. You're looking at, obviously, better on Ethereum as well. Look to 2021 on the daily. Again, many people in the last 2 years would really be happy with this type of performance. And then again, the daily time frame, it is something that you could incorporate into your life. Now, the 8-hour is significantly more profitable. On Ethereum, for example, going back to 2020, it has put up an 18,000% return. This is a big number in itself, though. This is a huge number. Let me show you a huge number. What happened in the last year, 2020? That's a huge number, If you were able to put up a 46% return in the last 15 months, that's a huge number. Most people aren't able to do that. Most people are telling you to put your money into short-term treasuries and collect 5%. It's the best they can do. There's nothing wrong with that. There's nothing wrong with that. That's the best you could do. Look, it turns out, or I hope that it does not turn out, one of the most overhyped phases is not your keys, not your coins. We are exposed often to high-tech ways coins are stolen, and that's why this thread exists. This is security. But I'm more worried about low-tech thieves. What would happen if a bad guy was standing over your wife, threatening to bash her face in with a wrench? It's called a wrench attack. If you didn't give up the coins, I'd give them up. What would you do? Just how secure are your coins? I see the real non-secure spot as in our own homes. Sale guy pointing out that, listen, some hardware wallets offer you like to have a main account and a hidden account. When you enter your password, the main account shows up. You have less funds in this main account and you give them to the attacker. There's no other way for an attacker to know if there's the second hidden account. Look it up on Ledger or Treasure. Helps to protect against wrench attacks, assuming you're already careful about security around tracking your own coins and transactions. Sale guy adds to Ledger's post on that. And I just want to add that that is good, but better is also using multi-sig. And why I don't recommend any type of company or anything like that, I'm throwing it out there for your own research. Unchained Capital, Casa HODL is another one, but Unchained Capital offers the opportunity to help with that process. If you go ahead and you click on collaborative custody, and by the way, they walk you through it in videos. They have enormous videos helping you along the way. And what a multi-sig is, it needs one key will not go ahead and allow a transaction. You need 2 of 3 keys in order to do it. Now what happens is, for example, Unchained Capital will hold on to 1 key and then you have 2 more keys. If you only have 1 key, and you should separate them geographically, if you only have 1 key in your house, regardless of someone is doing or threatening, there's nothing you can do about it. There's nothing you could do about it. You simply cannot sign a transaction with 1 key. And that's something else to add to and to look into. You know what I think is the best to do is to just clip off a little bit of a nugget and then add it to this conversation over here so that we have it to refer back to. And again, you could do it yourself. You could do multi-sig through yourself. There's plenty of resources and tutorials. You could use a third-party company. Unchained Capital will go as far to tell you what would happen if they went bankrupt and how in bankruptcy court you would get that 3rd key. It's also a lot safer than you only holding 1 key. You could lose that key. So Wes, you're bringing up a great point about potential vulnerabilities, but when you take self-control over your sovereignty, that also includes you are responsible. If you lose your key, you're done if you only have 1. So something to think about, really important part of the conversation. I want to move over to stocks. We're making progress over here. Craig, each and every day, that's it. We're simply here putting the work in. And just as I talked about for discretionary traders and discretionary trading, if you are interested in learning, a lot of people want to like remember in the Matrix when he downloads and learns Kung Fu? He's like, I know Kung Fu. And that would be fantastic. And maybe and potentially in the future, for those that wish, things like that through Neuralink could potentially even be possible. I don't know. I know that technology continues to grow at an enormous exponential rate, and it's very difficult to understand. A good thing to look at or think about is Boston Dynamics. Do you remember like 10 years ago when they started and the robots that they were building? And then 10 years later, look at these armies of dogs and what they're capable and what they could do. Could you imagine what is going to be taking place 10 years from now? I know I can't. I know I can't, but I would like to, and I challenge myself to continually be learning. You do not want to get stuck. If you get stuck, life is going to pass you by. But at the same time, you want to be realistic. If you understanding how compounding works, if you understanding how let me show you how compounding works before I get into stocks, because this is really, really neat. You ready? I'm going to show you, you're looking here going back to 2020, a 17,000% return. It's like, holy moly. Remember 2018, the difference? Oh, hold on one second. This is 2018 versus adding 2017. These returns on Ethereum get ridiculous. If you thought the returns were big on Bitcoin, Bitcoin is simply the rising tide that lifts all boats. But the returns are obviously the potential is substantially higher on Ethereum, Cardano. And if you're like me, a Bitcoiner, and you're looking to stack sats, I don't know a better way to do it than trading Ethereum. Either which way. This is 2017, right? And look at the difference between 2018 and 2017. It's insane. But what was that return during 2017? I mean, it's a massive return. It's 1,700% return. But do you see what that compounding does to each other? And that's the same thing. If you're able to do what was not anything special, right? Last year, 2022, was not anything special. And you're able to put up a sizable return. And then you're adding that to the previous year, right? Which again was not anything special, 2021. But you add those two together, and then all of a sudden, you start seeing compounding growth take place. And it's the same thing with knowledge, right? If you could just learn a little bit each day instead of having to put the pressure on yourself that you need to know now, man, isn't it amazing having foundational strategies to be able to execute off of? It takes a lot of pressure off of everything else. There's no question about that. Let's talk a little bit. In yesterday's session, it came up. We have solutions for Tesla. We're going to get into stocks a little bit over here. In 2023, CTM, after polishing up our crypto, was able to move over into the stock market. And that opens up many opportunities, including for those that right now do not feel comfortable holding funds in any type of crypto broker. Because the returns that we've been able to go ahead and first back test, and now as 2023, we begin forward trading them. They are comparable. Not the same as Ethereum, but they outperform on some of them on Bitcoin. They're comparable to what you could see on crypto. So let me just say that TSLQ, this is an ETF that is an inverse. And I was not familiar with it. I had to take a look at it to understand what it is and whatnot. There are some people who are able to execute in a margin account on the buy side and sell side on Tesla, right? And that's fine. And this is, for example, the one on the left is Tesla. That's what we're looking at right now. If you're looking at 2023, I mean, it's a really good return. There's no question about that. If you come back and you add in last year, 2022, right? It's a really good return. Add in the last 2 years, it's a really good return. And then add in, the last 3 years, and you're like, okay, it's comparable with, it's outperforming Bitcoin, right? And we don't know going forward, but going forward thus far, it continues to do its thing over here. This is the buy and sell side. By the way, we also have over here an ETF that's 1.5 times. It uses the exact same script, and the return is just 1.5 times higher as it is. Some people are wondering who could only execute on the buy side if using an inverse ETF is the way to go. So I took a look at just putting the same script over it. And I could see for 2023, there's not too many shorts taking place thus far. So this is not enough data. The next thing I went and did is look back at the year of 2022. And I see, so basically this is when you're selling, you buy on an inverse ETF. If you can't short and you want to be able to trade both ways, you trade just the long side here on Tesla, and then to short, you're actually trading the long side here on TSLQ. So that has a 52% return on the short side. So the next thing I want to go ahead and do is look on the short side here, going back the same way, but that's the buy and sell side. Let me take off the long trades, and you could see that, it's comparable. It has a 10% drawdown versus almost a 10% drawdown. The returns are similar. The number of trades are also very similar. It's close. And if someone believes, can we go back further? I don't know when that ETF was launched, but let's see if there's more data. There's not any more data going back further than whenever that started in 2021. That actually might be in the thing. Hold on, let me go to list of trades. I want to see when that first trade was taken. And it comes back to August the 22nd. Bear with me. Sorry about this dense piece of the session, but we'll move on in 1 second. And let me come down to August. Yeah, the return is different. It's off. Something to experiment with, though. If you can't execute on both sides on Tesla, if you don't have a margin account able to execute on the buy and sell side, some people obviously in retirement accounts, they're not margin accounts, and you're looking at being able to trade the inverse, I will go ahead and I will get this view into, right, add that over here to Tesla. I'll add that in over there so that you're able to go ahead and look at that and then explore and see if it's something you want to execute off of yourself. So we will get that in. Let's move over. Well, we got a couple of more stocks to talk about before I can move over. All right. So this is the TQQQ, right? This is trading off the QQQ, but this is a 3 times leverage ETF. And you can see from 2023, it's doing all right. It's outperforming Ethereum actually thus far in 2023. If you go back and you look at what this has done over, let's say, the past 3 years, the returns are quite spectacular. Let me add in the long side there with you as well. And where are we at? Something is off. Oh, I took off the short side. That's what it was. There we go. I'm gonna have to go back and confirm that, but I believe that's correct. And that's on TQQQ. The inverse over here is the SQQQ. So again, in 2022, there was a lot of shorts. This was going long when the NASDAQ was falling. And then the FNGU is absolutely insanity. This is another 3 times ETF. This is in 2023, right? Move back further and go back to 2020. And the returns are just simply gangbuster. Add in the short side. And it's outperforming Bitcoin. That's for sure. All right. Let me move over. I want to get into a little bit of market review with you all, and then we will go ahead. And if we reach, we're only at 78 likes. You have access to the scripts, right? Whether it is on the 8-hour, right? Buy side only, Ethereum, Bitcoin, Cardano, buy and sell side. For the daily time frame, same pairs. Right? Ethereum and Bitcoin, right? We have 2 versions, both the buy and sell side. And then for the stocks, the ones that we just went over, Tesla, the TQQQ, SQQQ, FNGU, D. And those are what everyone has access to go over and to utilize as they wish. Market review, we're talking about right now that the expectations are, the probabilities are, for next Fed meeting is a 60% chance of a pause. I'm wondering next Friday, all next week, and next Friday, we got lots of jobs numbers coming into the market. And I'm wondering how that's going to be repriced. I imagine we have non-farm payroll next Friday. We got JOLTS on Tuesday, unemployment claims on Thursday. There's a big data dump. In the following week, we have CPI. CPI coming out on Wednesday. After those two data points are out of the way, we are still in a data-dependent market. I know that people think that, right? Remember, if you go back just 2 weeks ago, I was like, I feel like right now the market is priced for perfection as far as tightening goes. And I didn't expect at all, zero. I thought it might come off of data. If we saw weakness in the job market, if we saw further weakness in the CPI, showing that deflationary pressures continue to carry with momentum, that we could see the market reprice a little, or vice versa, could price less. Now it's the inverse. I think the market has overshot too far, pricing in not only a pause, but as you get towards the end of the year, a bunch of cuts are being priced into the market. With the first cut being priced in right now to occur, that's changing. The market's changing every day. There's no question about that. Now it's not until September the market is looking for the first cut to take place. We will talk about another day what happens and why once they begin cutting. I know a lot of people are adamant that once they begin cutting, you're going to see equities fall. Those same people, though, have been shorting equities as the Nasdaq just put in the third best quarter since 2021. So look, I don't know what's going to happen. It depends on what's happening at that moment. And amongst those things that are going to matter to me is what's happening with the balance sheet. Remember over here, they were cutting rates. During this period over here, they cut rates 75 basis points. And what did, let me pull up the ES over here. ES, boom, melting up to new all-time highs. This is it. This is where they began cutting rates over here. And you could see melting up to new all-time highs. I think it's going to be important to watch what's happening with the balance sheet at the time that the Fed moves towards cutting rates, because the markets follow liquidity. And if not, you can see over here, you don't think the markets follow liquidity? That's okay. Live and learn. But the markets follow liquidity. When they begin pulling away, you remember that famous tweet, October 16th, 2021. 2022, a rate shock. Bitcoin is not immune. As they begin pulling away liquidity, what happens to equities? What happens to Bitcoin? Down and out. As they begin adding the liquidity, what happens? Bouncing up. So anyway, point being, as we get closer to when that event occurs, whenever the markets begin cutting rates, we'll watch what's happening and we'll analyze it and we'll assess it. Now, I get and you get it really doesn't matter to us because we have CTM 2.0 to make sure that we're positioned on the right side. And that is everything. But nevertheless, we want to be the best at macro. We want to be the best at TA. There's no question about that. And as time goes on and you get better and better, and then you go back and you look at over a 3-year period, not who caught what last move pretty well, but who is able to stay on the right side, move after move, you're going to be able to do it. You're going to be able to do it. So the point I was getting at over here is I believe that after the next 2 data points, we could see a potential repricing. I think right now the markets are priced a little too easy. I'm not trying to be contrarian. I know 2 weeks ago I said they were priced for perfection on the tightening side. I didn't expect banks to fail, but now the markets have priced over, let's say, towards what is expected on the easing. I expect the Fed is likely going to be raising rates this month at the next meeting in May. Now, if the data comes in between the jobs market all of a sudden showing weakness, and then the following week the CPI comes in weaker than expected, then I'm going to say, okay, likely they're going to pause. We're data dependent. We'll keep taking it as it comes. But we do have BlackRock now warning that it's unlikely that the Fed will cut at all this year. So it seems to me that right now the markets are priced a little too tight for easing, and we'll continue to monitor that as we go. There are two membership levels. There's the cheaper one, the $55 a month. That offers buy side only. So you'd be looking at having access to all buy side. If you're trading and buy side's enough to get it done. When I talk about getting it done, I'm talking about, let's look at Bitcoin. We know the returns are significantly greater on Ethereum. But let's look at the buy side only coming back to 2020, right? I know there's not a person that would not be grateful to have that. What about, this was a bad year, 2022, right? And if you're trading the buy side only, let me get rid of 2023, right? If you could have put up on the buy side alone 8% in 2022, that's immense. Why, Jordan? How could you say that? Why would you say that? It doesn't make any sense. Well, if you're holding Bitcoin the whole way down, you've lost a massive amount of purchasing power. And to recover from that 75% drawdown, you now need a 350, 400% return just to get back to break even. Now, likely that happens on Bitcoin if Bitcoin continues to do Bitcoin things. But how much stronger it is preserving all of that purchasing power, and for the next 400% up, be capitalizing on it. And you don't need to do that on the 8-hour time frame as well. You could do that on the daily time frame. And for Ethereum, just so you're aware, buy side only is enough. This is 2021, the last 2 years, buy side only. It's an amazing return. In 2022, buy side only, no leverage. It's a really good return, 60%. So if you want to trade both sides, because if you're trading both sides, the returns are significantly greater. And it's up to you and how you're executing buy side or buy and sell side. For stocks, it's both. It includes both, regardless of your membership level, as well as for Ethereum and Bitcoin. All right. How long have we been online? 56 minutes. We were 9 short of the goal. I was hoping to get with all of you. Let me see if I could go ahead and fix this a little bit. I was hoping to get with all of you 100 likes. We're 90. We're at 90, but it's okay. I had a lot of fun. I hope you learned something. If you watch this on the replay and you learned anything at all, go ahead and smash the like button with that love. Everyone, lots of love to you all. May God bless you. Thanks for being here. Have a beautiful day, everyone. I will talk to you soon.